Okay, so my 150K account, which I can do a daily max loss limit of around $3,000, is now sitting at $2,700. So the first question I have to ask myself is, do I want to save this account or do I just want to let it go? And the answer is I want to save the account. I'd like to take it from $2,700 to $27,000 in the next 2 months. How do I do that? How do I save this account? So I know many of you have been in my spot before, for sure. Every person who's traded has gotten into trading has been in that spot where they're about to blow their account. So what do you do to save it? How do you not blow an account if you don't want to blow an account? The first thing to do is stop trading, right? Just stop. The next thing for me to do is to ask myself, why? What is the catalyst that got me to this spot? Maybe I won't arrive at that answer today. Maybe I'm still emotional from my trading. Maybe this takes a few days to be able to come to this answer. Don't trade the rest of the week, get through the weekend. Figure out what is the catalyst that got me to this spot. The next piece is, what do I do to prevent a blowout right now? Like, I'm at a critical level where I could easily blow out my account. So how do I prevent that from happening? That needs to stop immediately. And then the last piece is, how do I regrow and protect the account while it's regrowing? I need to protect what's left and regrow it. How do I do that? All right, so for me, the why has been casino trading. If I'm taking any trades where I don't have a proven statistical probability of success, it's a casino trade. And that probability is not based on 5 or 6 trades. That probability is based on 90 trading days or over 100 trades. What does that look like? And then is that trading every opportunity to get that probability? Is that trading every Monday? Is that trading 9:30 to 2 o'clock? What is all the factors involved in getting that probability? And as soon as I trade outside of that window, it's now a casino trade. So I've been taking some casino trades, and that really hurt the account. When I don't casino trade, account does okay. I have red days, red trades, but I don't really get destroyed like I do when I take casino trades. But why am I getting so destroyed? The next piece on the list is over leverage. Too much risk for my position size. So for me, I don't do my risk management by putting my stop in a specific spot. I put my stop where it needs to go for the probabilities. And then for risk management, I buy the right position size for that. So if it's one contract and that's still too much, one contract say is going to risk me $500 with my stop at a certain spot, then I need to go to the micros. And if one micro is still too much, then I can't take the trade. So that's how I should be managing my risk. But I haven't been. I've been jumping into a position, getting 2 contracts, not really looking at the risk on it, and getting destroyed on those trades. If those were winning trades, it would have been awesome. But typically for me, I don't get lucky in the markets. I get punished. And part of that is just being lazy, right? Why not look at the risk parameters, see how many contracts I should have, and so forth. And really the truth is just sometimes I get lazy. I get comfortable, complacent, lazy. That candle looks like the same candle I saw yesterday or this morning. It's probably going to be like a $200 risk if I jump in with one contract. And then I get in and I realize that candle is actually a $400 risk. When you zoom in on the chart, your candle might fill the full frame and be a $10 spread. Well, in the night session, the morning session, the candle might fill the full frame and be a $50 spread. It's just filling the frame. You have to look at the numbers to see what's really going on there. And then another thing that happens to me is sometimes I get impatient for account growth. My account's growing slowly. I don't want it to grow slow. I want it to grow faster. And instead of going back to the trade plan and the strategy and saying, how do I make this grow faster? I'll just throw 3 more contracts onto this trade. Why not? Should be all right. And then that'll be the losing trade, So not being patient with account growth is a problem. Okay, so then what do I do about that? So the first thing I'm going to do is my trader rehab, which I was supposed to be in, and then I took a trade that was way outside of it and destroyed the account some more. So what do I do, right? I need to be in trader rehab. That's one. So as part of my trader rehab, to make sure that I'm staying in line, is I'm going to trade micros only. And that's it. And if, my trader rehab lets me risk $100 and, full up on micros, I'm only doing $80, well, then I'm only doing $80. And that's it. Micro only until I get to the right scaling ladder positions. So that's what I'm doing for now to protect my account so that it doesn't continue to degrade because of dumb trading mistakes, FOMO, etc. Micros only. The second thing that's going to do is by trading my strategy with micros only, I'm protecting my account, building back the confidence, getting rid of some of that fear of my account's going to blow up, and then getting back in a groove, watching things scale up from there. And then when I get to the right spot, then I can transition back into minis. All right, so how am I going to do it? I'm going to revise my scaling ladder. I'm going to go back into my scaling ladder. I'm going to revise it to reflect my current account situation and the rehab plan and trading micros only. And I'm going to do it in a way that will allow me to rebuild confidence, but at the same time be aggressive so I don't have to worry about being impatient. Next thing I need to do is double check my strategy and make sure my strategy is really solid. And when an account gets to the point of like blowout area, there's some things to think about. Risking one to make one versus risking one to make two or three. Typically what I find is if you risk one to make one, you'll have higher frequency trades. More setups will take place than if I'm risking one to make three. If I'm going to have like a 70% win rate. Or if I'm going to have like a 50% win rate, I could have more setups risking one to make three or two than risking one to make one. Because a 50% win-loss setup, risking one to make one, is going to blow my account. But risking one to make three, I can still do okay there. Just mentally I have to be okay with the number of losses that I'm going to see and not get into that defeating game and revenge trading and all that stuff based on having high losses. So if getting me into trouble is revenge trading and not being able to cope with loss, then I don't really want to risk one to make three strategy where I'm going to have lots of losses. I'd rather have an 80% win rate on a risk one to make one and just take one or two trades a week. That's me personally. So I need to determine what I want to do here. But with a really small account balance, I need to keep my risks really small. Like $50 risk is what I'm looking at right now. Well, if I'm going to do $50 risk, risking one to make one, and I'm only going to take a few trades a week, it's going to take forever for my account to grow back. I'm going to get impatient. I know how my personality is. Then I'm going to casino trade, and it's going to be game over. So I need to focus on a risk one to make two or three strategy. The downside to those is, of course, a lot more loss. But if the strategy is to incur lots of losses, then they don't feel so bad because you're expecting them. You know you're going to have losses trading, but when your strategy is to have those losses, sometimes it's like, okay, my strategy is working because I'm having the losses I'm supposed to have. And sometimes psychologically can feel a little better if it's planned that way. But if for some people, it would be the opposite effect. But for me, having just a small account, risking only $50, I need to try to risk one to make two or three so that I can quickly get my account growing back again. This also means higher frequency trading. Higher frequency trading opens the door for more mistakes, and I like to make a lot of mistakes. So there's a risk there that I'll have to monitor. I prefer to risk one to make one and have a higher probability and fewer trades. Then I'm less risk of making mistakes and less risk of something happening that puts me on tilt. But with my account in the position it's in right now, for my psychological needs, I have to do it this way. Risk one to make two or three, because again, if it takes too long, I'm just going to start casino trading. I'm going to start swinging for big home run hits, and I'm going to blow up my account. All right, so here's my scaling ladder right here. So if I put $50 in, and I'm going to switch to $100 once I've made $500, and then once I get down here, I'll be at $1,500 in my account, and I'll switch to $200, and then I can see I can look at my trade frequency and setups and all the stuff and see about how many trades do I get to keep at the end of the week. This is based on trades I get to keep. I can't say based on every trade because I'm going to have losers winners will have to pay for those losers. But if I'm risking 1 to make 3, one trade can give me 3 of these blocks. Then I have a loser. One trade can give me 3 of these blocks. I have a loser. You know, so even a 50% win rate, this can go pretty fast. So I'm projecting about a week at the fastest and 2 weeks at the slowest. So in about 2 weeks, between 2 and 4 weeks, I should have about $9,000 back in my account. So by the end of December, say at the end of the month, I should have about $9,000 back in my account in a great spot. My account high is at $12,000. And then the next 2 weeks, 2 to 4 weeks, so basically by the end of January, I should have $18,000 in my account roughly. And then by the end of February, I should have $35,000. But I would have hit my goal somewhere in the beginning of February if I stick to this plan. Then I can ask myself, is that acceptable? Can you accept waiting until February to be at $27,000, which is the goal? If the answer is no, then I need to go back and figure out how to get there responsibly. Because if the answer is no and I just do this, I know I'm going to start casino trading. I can't do that. And when I feel the urge of FOMO and doing all those things, I need to come back and look at my scaling ladder and say, hey, just keep doing what you're doing. By February, you're in a good spot. Are you okay with that? Yeah. All right, continue on. So my scaling ladder helps me figure out where I'm going projection-wise, but it's also a reminder when I look at it to see that I just need to stay the course. If I'm going to get casino trade or I'm going to get FOMO, I see something happening, I can ask myself, is it worth it? You know, that trade for somebody else. Your trade's coming. Look at your scaling ladder. Are you still good with it? If the answer is no, I need to go back to my trade plan and my strategy and figure it out. But right now the answer is yes. So that's the plan right now. So that's pretty much what I've done. I've gone back through, said I got 2,700 in my account. I need to save my account. I want to get to 27,000. How do I do it? How long is it going to take? In a nutshell, to make a short video, that's basically what I'm looking at. All right, traders, see you in the next video.